Hi believers, this is Amit from Waya team, and I'm here to provide a weekly bite. Before we discuss markets, I want to congratulate the top 100 winners and all 5,000 participants of Waya 6 stock market contest. We had a great start. Let's come to the Indian market. The India market concluded the week with minor gains, with Nifty and Bank Nifty gaining 0.3% and 0.6% respectively. Broader indices regained some of the previous week's losses, outperforming the main indices. Both the mid-cap and the small-cap index went up about 1.5%. The major reason for the rebound in the market was US Fed's indication to proceed with three interest rate cuts this year. Investors switched their attention to interest rate sensitive sectors such as real estate and automobiles, which emerged as the week's best performers. Last Friday, the IT sector stocks experienced selling because the US multinational IT company Accenture reduced its growth outlook for FY24. Accenture lowered its full year revenue growth outlook to 1% to 3.5% from 2% to 5%. This indicates unwillingness of companies to spend on IT due to global growth uncertainties. How do we see the markets going ahead? On the valuation front, indices are not in a frothy zone now. However, we need to wait and watch because if the market move higher without earning support, we will again reach an unsustainable valuation zone. As a result, we conclude that the index may consolidate within a range, and it is very important till the earning season starts. As mentioned in our last weekly bites, that many stocks were trading in attractive value zone post correction and therefore deserved some buying. Do note that the good quality stocks have rebounded 10 to 15% already. Technically, on daily charts, the major indices are trading near resistance. Nifty has to close about 22,200 to see a clear rise towards its all time high of 22,525. Support can be found at 21,800 level. We are positive on sectors like railways, defense, manufacturing, power, and infrastructure. The theme that we have added to our coverage is recycling. Although we have one multi-bagger open from the recycling theme, but we believe post the correction, there are stocks which are attractive now. Last week, we closed two stocks, APAR at 8% within 6 days and Skipper at 8% within 1 day itself, and recommended three additional stocks to buyer believers. As mentioned earlier, when we see opportunities, we shall give more calls than you can consume. On the other hand, if we see market is a little bit weak, we may go silent to protect your capital. Regarding open calls, most of the calls have recovered in this up move. We ensure that we recommend fundamentally strong stocks that will show limited downside in a short term but will see immediate recovery in the upturns. The net direct tax collection grew 19.8%, translating to over rupees 18.9 lakh crore, with advanced tax collection rising over 22% during 1st April to 17th March 2024. With this, the government has achieved over 97% of its direct tax targets set in its revised estimates for the financial year. Global market constructs continues to be supportive, with the US and Japanese market posting new record highs. US Federal Reserve Committee stuck to its forecast of three rate cuts in 2024, despite inflation running higher than expected in recent months. Investors were expecting a harsher stand by the Federal Reserve, hence the softer stand led to rise in risky assets. With FOMC out of the way, risky assets, including stocks, are expected to outperform well in the coming weeks. For today's bulletin, that is all. Wishing you a great trading week ahead. Thank you.